guys, this is Hector. Today is Friday the 4th of May 2007. It's Friday afternoon and London session has just closed for today, and for the weeks it is Friday. Alright, first of all, I want to apologize for recording this video way after the entry has been taken. I took this entry 2 days ago, but well, I recorded the video live as I was taking the trade, but unfortunately it seems like I had my microphone volume all the way down, because when I went to upload the video on the website, I realized that well, basically there was no sound at all. So I'm recording this video again, okay? Anyway, no worries, this trade is not a winner, so I've got nothing to brag about in here. Alright, I'm looking into the USD Canadian dollar in the 4 hours chart. As usual, all my pre-entry requirements are met and fulfilled. Moving averages are pointing down, parallel to each other. Price is spending most of its time below the 50 moving average. The 100 moving average has never been challenged for the last quite a while already. The price is bouncing nicely down off the area of dynamic resistance, which is the area between the 30 and the 50 moving average, as you can see here, 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 and here. Well, all the elements that I show on my website, on my trading system, they are met. It's a nice downtrend, and that's why I'm considering, or I considered back then 2 days ago, a short entry. Let me explain the reasons to take that trade. Well, first of all, I will point the entry of the exit moment when I entered. It was right here, okay, right there. I entered the short. All right. Let me tell you what I was looking at in the chart at that precise moment. We had a double bottom, sorry, last week, right there, which got broken out. I already reviewed this breakout on my blog a few days ago, so if you scroll down the blog, you can see this trade commented. So after the double bottom breakout, okay, we saw the final retracement back to sellable areas, which is again the area between the 30 and the 50 moving average, the area I like to keep an eye on to search for new entries. Also, if we have a look at the Fibonacci levels, we can see that, let me zoom in a little bit for a clearer view. We can see that's banked right onto the 61 Fibonacci level, right to the peak right there, and also into the trend line, okay, and the previous support acting as resistance right now. Alright, at this time, as price reached this level, I zoomed into the shorter time frames to search for an entry, for an entry formation, okay. Let me clear a little bit the chart. There we are. So I zoomed into the 1 hour chart. I usually, if I'm trading off the 4 hour chart, if the 4 hour chart is my setup chart, then I zoom to the 1 hour chart for the actual trigger. I always look for a time frame that's 4 times smaller than the 4 or 6 times smaller than the setup chart. Since I was setting up this chart of the 4 hours chart, then I am zooming into the 1 hour chart for the entry. Alright, this was the area we were bouncing off the 4 hours chart confluence of support. We had the 61 Fibonacci level, the previous swing down now acting as resistance, the 30 moving average, and all those kind of beautiful things that I showed you before. So I zoomed into the 1 hour chart and I saw this M formation, which, as you know, as I explained on my website, it's a reversal formation when it happens right off an area of resistance. So the M formation is very clearly defined. You can see that it's was support and resistance, so I decided to wait a little bit further, which happened right afterwards. This bar that I'm marking right now triggered my short entry. This was my short entry. Okay, when I entered there, but if we consider the spread, I more or less entered again right there. That's my entry. And well, what we saw right after, it was that we entered a period of consolidation. You can see very clearly defined this area of consolidation. Okay, it had been one full day, as you can see. This blue, each blue square defines one trading day. So throughout the day we saw nothing but a range bound market condition. This is probably in the daily what some textbooks call spinning top, you see. Actually, let's have a look at the daily chart. Just 1 second. And there it is. Okay, this is the spinning top. Very tight consolidation pattern. 1 second. Right there. Okay, so we had one full day of consolidation. I was, barely 5-6 pips in profit. Very frustrating. Very boring day. Very slow. Nothing was happening in the markets. Actually, pain in the ass of a trading day. But I kept I kept the position open because all the moving averages in the 4-hour chart were on my side, and also in the 1-hour chart we were seeing that moving averages were curling down, so that was nice to see. So this morning we saw another breakout of previous actually right there. We had the previous swing down double bottom, which got broken this morning. Okay, but this actually saw some hope on this trade. Okay, making new lows for the week, breaking the last the previous swing down double bottom right here. But we had quite a nasty retrace up all the way almost to my entry level. You see, that's my entry level right there. At that time I was already fed up with this trade. I had been in the trade for 2 days, so I decided to just readjust my stop loss. I didn't want to take any further risk in this trade, so I moved my stop loss right above this last trend line. Okay, right above the 30 moving average. If price breaks above this trend line, I don't want to be in this market. We still have the 4 hours chart moving averages on our side. The market sentiment is still down, but perhaps I have mistimed my entry. I don't know. All I know is that there have been 2 days in this trade, and I'm right now just 15 pips in profit. So my stop loss is 10 pips above my entry. If I get stopped out, if we break today's high and this downtrend, and I get stopped out, I'm gonna be only minus 10 pips. It's gonna be a minus 10 pips loss. I'm fine with that. I just don't want to take any more hit. My previous stop was right up there. I'm not gonna wait for my for that level to be reached. I move stop loss here, 10 pips. If it goes back down from here to my final target, that's good, great. If it doesn't, I've lost minus 10 pips. Like I say, I think in-trade money management is fundamental, is crucial, and I'm not gonna take any more risk. Alright guys, I will update on this video on the outcome of this trade. Bye bye.